And the Indian ETFs, the Indian exchange traded funds, for that is like structure that proxies how the Indian stock market does, was up 2% in trading in US markets yesterday after the Indian markets had closed.
So what effect will this have on the Indian stock market and the FIIs?
Is that the new tariffs of 10% are in place for the next 150 days. And as it looks today, he can reintroduce it again in 150 days.
Supreme Court strikes down Trump tariffs. What next? $250 billion collected in import tariff. And 75 of that is refundable. Trump says trade deficit reduced by 78%, whereas the official data says it is barely reduced by 0.2%. In hours, he says that he will impose a 10% global tariff. So what exactly is going on? We have with us Mr. Vivek Doval, who's invested in the US stock market for over 25 years. So, Vivek, is this the end of tariff or just a new design of trade warfare?
Thank you very much, Anuj, for having me over. This is a very, very monumental development. The Supreme Court of the United States has quashed the Trump tariffs of last year. And whilst the tariffs that Mr. President Trump had introduced last year are gone, it is very likely that the Trump administration will carry on the trade tariff war with the rest of the world. For example, in the first, right after the Supreme Court ruled, the President Trump has introduced tariffs of up to 10% for the next 150 days based on the Section 122 of the Trade Act of 1974. Now, this is a temporary tariffs that have actually replaced the tariffs that have been quashed by the Supreme Court. But these tariffs are there and they will carry on staying there for the next 150 days.
Yeah, notably, you did use the word temporary. So, Vivek, this uncertainty bothers the market, bothers the investors, and of course, deep analysis can make it an opportunity. We need your inputs. What do you think this is going to lead to? 150 days, what next?
Right. These temporary tariffs are tariffs that were introduced in 1974 when there was a balance of payments emergency. So the reason why he's introduced these tariffs right now or rather, the reason why he's introduced is because the tariffs have been quashed by the Supreme Court. But the rationale given is that there is a balance of payments emergency. So what President Trump can do is that in 6 months' time, he can come back and say, there is another balance of payments emergency. Because the balance of payments emergency, that is the widening current account deficit of the United States, doesn't go away. So in 6 months' time, he will actually say there is another emergency and probably reintroduce these or carry on with these particular tariffs. So, if that situation unfolds, there will be, court cases that will be brought against the administration, claiming that these tariffs were meant to be temporary. Those court cases will have to be again decided by the various courts of the United States leading up to the Supreme Court. A similar process could start with these new tariffs that President Trump introduces. But the default situation as it stands today is that the new tariffs of 10% are in place for the next 150 days. And as it looks today, he can reintroduce it again in 150 days. So these tariffs are now the baseline of tariffs which have come down from the much higher tariffs of, like, say, for example, India at 19% to 10% going forth. And we should probably expect these to be the baseline tariffs going forth. Now, of course, if the courts quash these tariffs as well, then maybe the tariffs could go down even further.
Right. So you have given us sight for at least 150 days, and further you've said that that could go on for another 150 days and on and on. So that means there is so that means exporters and the international traders will benefit as on date for 150 days and most probably beyond. So what effect will this have on the Indian stock market and the FIIs?
Well, as we speak, this court decision came quite unexpectedly yesterday after the Indian markets had closed and even when the US markets had opened. It finally came yesterday unexpectedly, and the Indian ETFs, the Indian exchange traded funds for that is like structure that proxies how the Indian stock market does, was up 2% in trading in US markets yesterday after the Indian markets had closed. So the initial knee-jerk reaction in the Indian markets is likely to be extremely positive. We have already seen that evidence that Indian stocks did very well in the US, and now because the amount of tariffs will be lower, this also means that the Indian exports to the US, the exports to the United States should pick up, which is also good for the currency. So we should expect the markets to be up and the currency, the Indian rupee, should also be up.
So Vivek just indicated that the ETFs listed in US for the Indian stock market is already up by 2%. So that is something to cheer. Can you put some light on what effect will this happen to the rupee dollar exchange? I
Yes.
know I'm asking,
Yes.
bombarding you with
Yeah, exactly.
but
As,
there
as
is
I was
so much
alluding to
happening.
before, yes, actually, the Indian rupee has been under pressure for a variety of different reasons over the last, over the last year or so. Some of the principal reasons are the introduction of the tariffs, and off late it has actually been because of the rising crude prices, because of the Iran-US situation. Now, the Iran-US situation is hasn't been resolved. As we go into the weekend, it looks like Iran is going to come with a counter offer to the US to make sure that the US doesn't attack them. The counter offer could be quite favorable, and we might get a situation in which Iran relents on its various programs, and as a result of which, the war doesn't happen. If that were to be the case, that is extremely positive for the crude prices to come down, which would be beneficial for the Indian rupee. So that's one mechanism. The second is, of course, with this trade development in the US, in which the tariffs are going to be coming down for the rest of the world, including from India, from 18% down to 10%. This should be very good for Indian exporters. And, as a result of which, the demand of the Indian rupee should be going up. And so the rupee should be appreciating. So we actually have the building blocks in place for a rupee appreciation.
So great. Vivek, you've given us sight for 150 days and beyond. So we can expect a 10%. And due to which we have already seen the ETFs listed in the US for the Indian stock market going up by 2%. And next is, of course, the rupee. Since the exports will improve, we can see the rupee strengthening a bit. So all three online and looking forward. So, Vivek, Mr. Trump's tariff on 78% reduction of trade deficit, whereas the official stats are talking about a bare reduction of 0.2%. Now, that is a disconnect that is very rarely seen. Can we have your opinion on that, Vivek?
Yes. Well, when you actually look at the numbers cited by President Trump on numerous subjects at numerous times, when the fact checkers have subsequently gone, they have not been able to reconcile the numbers. I think what President Trump has been able to do has been something very substantial and meaningful. That has one to create an awareness in the United States that they are running vast deficits, and these deficits, both current account deficits and fiscal deficits, are unsustainable. They need to come down. The quantum of the deficit reduction, as you cited at 0.2% of GDP, is likely to be more realistic. But the trajectory and the policy impetus is more to incentivize people to produce more in the United States and import less going forward. So, the efficacy of these tariffs cannot be judged by one particular year. One would have to see it over several years if the deficit is going down.
That certainly is true. Almost the last question. I've caught you on a Sunday, so my last question is: an appeal or a stay possible that the previous the tariffs that were imposed will continue if there is a stay or an appeal that is filed in the legal system, U.S. legal system?
This particular case, for the better part of almost 10, 11 months, has actually gone through several courts, starting from the trade courts, in which the verdicts were generally going against the tariffs. So what the Supreme Court has actually done is just the vindication of the lower courts. And the fact that the Supreme Court has now ruled on it, there is no turning back. There is no appeal court beyond the Supreme Court.
Great,
This is
great.
the final stance that the Supreme Court has taken on it and will effectively be the law. And it's a very, very consequential result in the sense that the Supreme Court has very clearly mentioned that the imposition of tariffs is the prerogative that has been given to the Congress, that is the US Parliament, and not to the presidency. They said that if the founding fathers had wanted the presidents to decide the tariffs, they would have written it in the Constitution. So the precedence has been established going forth forever. So it's a very consequential, momentous result. There are loopholes around it, and those loopholes are going to be still used by President Trump to extend the tariffs. But it has become extremely clear that the President of the United States of America doesn't have the mandate to impose tariffs. He can temporarily do it through some temporary measures, but not as a way of influencing policy. That mandate is squarely with the US Congress.
So there are loopholes, as Vivek said. Trade wars rarely end, they change forms. For us investors, uncertainty plus deep analysis is equal to opportunity. And that is what we do at Torch Investment Lab. Deep analysis, inferences that can benefit our viewers. Vivek, thanks a lot for taking out time over the weekend.